What is going on, guys? Good evening. It's your favorite mortgage lender, Abdel Kwatmi with Gone Mortgages. Happy Tuesday. I hope everybody had a blessed Labor Day weekend. It is crazy. We are now in September 2025. So much has transpired. We just wrapped up a very, very busy inflation data week. We're going to go over that, specifically about the PCE report, personal consumption expenditure report. We're going to talk about what is happening on the market when we take a look at mortgage interest rates and how we have been retained relatively flat at that 6.5 mark. Some instances with FHAs, we're seeing as high as mid to high fives, which is awesome to say. We're starting to see maybe some potential change on the market on a consistent week-to-week basis. We are going to get some updates this week on employment data. If employment data comes in low, I think we should 100% be in smooth sailing for the Fed to come in and cut their federal funds rate come later this week. But before we dive into that, let's talk about what happened this past week. Again, on the latest inflation data, again, inflation came in right in line with the expectation at that 2.6%. New home sales did obviously come in and beat price expectations. Home prices obviously slowly cooled, which obviously is the norm as we're expecting. Some updates on housing, growth, unemployment, and all that fun stuff. So let's dive right into it. We know PCE report, personal consumption expenditure report. That is the Federal Reserve's favorite measure on inflation. And we know that inflation jumped up 0.2% for the month, bringing that annual PCE inflation report at 2.6%. Again, guys, we know that the Fed's major measure on inflation is at 2.9. So we're kind of teetering into maybe potentially that 3% mark. Big thing, again, we always talk about this, stability and employment. We know that the Fed is obviously really monitoring this extensively. Persistent inflation, again, is going to keep interest rates higher for longer. Weakening economic factors obviously could change it, which is predominantly going to be based on inflation and based on the employment market. The Fed chair, of course, in that last meeting at the Jackson Hole Symposium, did obviously signal that they were going to be closer to cutting interest rates. Data is going to be key, right? We are going to get one more employment data and one more inflation data right before the Fed meeting on September 17th. Again, big thing for us to take a look at. We know that the Fed, what do? They adjust short-term interest rates. They do not directly adjust mortgage interest rates, right? It's the overnight borrowing rates for banks. This is obviously what affects the economy throughout, obviously including mortgage interest rates, okay? So then the big data points obviously is going to come down to, like I said, August job report, which we're going to get this week. And then we're going to see how that data could potentially impact the Fed's move. New home sales did drop on a slight basis, just 0.6% in June. 652,000, obviously, home units were there. Slight revision from the prior month, 256,000. Coincidentally, right, you see some of this data is just constantly being skewed. 499,000 homes on the market, close to some of the highest levels in 2007. But if we really look at it, only 121,000 of those homes are finished and ready to move. So can't really count those homes that are still being built or homes that are still not completed because obviously people don't have the ability to move into it, right? One thing for us to take a look at, again, is obviously the contracts in July. So still a little bit lagged. Mortgage interest rates really did not drop until pretty much 3-4 weeks ago. Annual home prices, again, seeing the gold standard, we see a little bit of a rise of 0.1% from May to June. After that small little dip that we saw, home prices are up 1.9% nationally. And those of us who are on the East Coast, on our side of New Jersey, we're even seeing a bigger influx of homes start to continue to appreciate consistently. And I do anticipate that as interest rates start to go down, guys, we're going to go back to what I say, the pandemic competitive nature. We're seeing a lot of multiple offers. We're seeing a lot of consumers really come into their expectations of what they want. Very critical for us to keep an eye on this, right? According to the National Association of Realtors, buyers remain cautious despite inventory and borrowing conditions. And it's important for us to take a look at this data because if we start seeing the economy start to grow, like we saw the GDP reports come in, again, those estimates actually jumped up 3%. Labor sector, again, we know almost 2 million people are collecting unemployment after they have been simultaneously let go, right? 1.95 million, just a hair shy of 2 million borrowers, or 2 million people, I should say, who are collecting unemployment. Very important for us to take a look at that. And just like I said, we're going to get updates tomorrow on ADP, private payroll. We'll get updates on continuing jobless claims on Thursday. And then, of course, the BLS report on Friday with non-farm payroll. Then just a quick recap, like I said, inflation came in at the estimates. New home sales did beat out those forecasts. We obviously saw some changes on new home price growth, and then, of course, some of the changes on pending home growth. As the market continues to get busier, as the interest rates continue to diminish, we're going to start seeing a lot of opportunities for clients. We are staying extremely busy for those consumers who are looking to drop their interest rates. Anybody who's got a hair over 6.5%, we're obviously doing a full-blown total cost analysis. It may necessarily not be the 100% right move for you to pull the trigger on a refi right now. Very critical for you to understand with your professional what is that strike rate interest rate that is going to make the most financial sense for you as a consumer, okay? If you're struggling to pay that monthly payment, then you may necessarily consider refinancing a little bit earlier, but I'm a firm believer that interest rates are going to continue on that downward trend. So if you're somebody out there, make sure you get those updated numbers from your loan professional. Make sure you're understanding the market in your specific local area, because a lot of people's expectations on appraisals may necessarily be a little bit different than what it is. Thank you, Dave. And we really want to make sure that we're in the perfect position to truly qualify for that refi. The last thing that you want to do is be premature. We have got a database just the last 3 years of well over 325 plus buyers. I may have refinanced probably about 15 of them. Just for some consumers, actually a good chunk of them were actually cash out refinances. I do know the market is set to get better. I do anticipate a lot of different changes happening in the market. If the market tends to maybe shift that much quicker, that is the importance of why you need to have that consistent communication with that mortgage professional, who could be in a position, if you have an FHA, might be able to get your interest rate down right now at around like 5.5, right? If you have a conventional and you're at maybe 7, it may necessarily make the right sense, but nobody can truly make that decision for you except yourself. Make sure you're finding that trusted professional that is putting a full-blown total cost analysis in front of you. You're getting a firm understanding of the costs, whether it's being rolled into the loan or you're paying for it itself. I am constantly getting phone calls from some clients who the math just doesn't make sense. And my role is to simply advise them, show them, prep the actual numbers in front of you, and then you as a consumer make the conscious decision for yourself and your family as to what works best. Appreciate you guys, as always, jumping on. I wanted to make sure we stress the importance of, as the market continues to really drop, we take firm examples of understanding that we're going to get back to a competitive market. We're going to start seeing some homes go for 30, 40, 50, sometimes even crazy numbers higher. If the home does appreciate and does value for that much, I bought my property in June of 2021. We offered 60 more than it was listed for, but we knew the comps were there. We knew the value was there, and the house came back appraising 65 over. So make sure that you're getting a detailed understanding with your loan professional as to what are the numbers for yourself, how everything can be understood and construed, and then from there, you're able to make the conscious decision. As always, if you have any questions, please make sure you guys visit our website, gotmortgages.com. As always, we will share this on our channels later. If you guys have any questions, feel free to reach out. Talk to you guys soon.